All right, the time is now 4:05, so why don't we go ahead and get started. Again, welcome everyone to our CIELO workshop series. This is a monthly workshop that we offer at the end. Actually, it's typically the last Wednesday of each month. And what our whole goal is to actually bring out different guest speakers to talk about their area of expertise, all related towards entrepreneurship. Today's topic is actually on business taxes, so I hope you're all ready to discuss and learn about business taxes, which is a common question that a lot of people do have, a lot of entrepreneurs. So we're very glad to have our guest speaker, Kevin, here today. And before we get into Kevin and Kevin's presentation, for those of you who are actually new to CIELO, and may have not heard of us before, I see a lot of familiar faces and I see some new ones too. So again, thank you all for joining us. But I did want to do a little quick introduction to CIELO about who we are and what we do. So CIELO, we stand for Community for Innovation, Entrepreneurship, Leadership, and Opportunities. We, oops, I went forward a little bit. We officially launched in 2015, but we've been helping clients since 2012. So we've been around for a few years now, and we're relatively new, but helping clients is not something that is new to us. We're a nonprofit organization helping aspiring entrepreneurs become business owners. We help you build and develop the entrepreneur mindset needed to help you achieve success. We provide the resources and the guidance, and you provide the hard work and passion. So what we do here at CIELO is essentially we work with entrepreneurs. We're trying to get you all from having that dream of being a business owner to realizing it, right? We also help existing business owners as well too. We provide what's called business technical assistance. So for any business owner or someone looking to get their business off the ground, we're here to be a resource and help you achieve that. So one way we do that is through these workshops. Another way is we also have a small business startup program that we offer. We offer it pretty much monthly. It's a 6-week program. We're in the middle of our last one for this year, but we'll have another one in January that we'll make sure to let you all know about. But it's a 6-week program where we have 3 weeks of live instruction covering different topics and 3 weeks of one-on-one consultations to help you get towards a business launch. So I know some of you are already familiar with this program because I see a lot of familiar faces, and some of you are in the program right now. So it's good to see you all here as well. In terms of some upcoming events that we do have, I went forward again. Our next and final CIELO workshop for 2021 is actually December 1st at 4 p.m. This one's going to be the first week of December, or first Wednesday of December, because the last Wednesday of November falls right before Thanksgiving. And I'm sure a lot of you will be busy and have a lot of things going on. But our next topic will be Sole Proprietorship 101, how to provide a quality job for yourself. This one here is actually brought to you by Jocelyn Cuestos with Small Business Majority. And for any of you who are looking to start a small business, have thought about being a business owner, being a sole proprietor, this would be a good one for all of you to actually attend. December 1st, 4 p.m. We'll have a registration page coming up soon, and check our website for any updates. And we always do a good job of letting everyone know about what we have to offer and what's coming up as well too. So let's talk about our guest speaker today. So our guest speaker today is Kevin Castillo, who's going to be talking about or speaking on Introduction to Small Business Taxes. Again, this is a very common topic, one that for any of you who have met me, I will talk about the basics, but I'd rather have an expert talk about the specifics, right? So a lot of entrepreneurs have questions when it comes to small business taxes. So I've been working with Kevin for some time now. We've collaborated in the past, both through CIELO and also at my previous employment at another nonprofit organization. So Kevin's well-versed in these type of things, and a senior accountant, operations director at LACPA Partners, Inc. So with that, Kevin, thank you again for joining us. And the floor is yours, my friend.
All right, thank you, Alex, for the introduction. I just wanted to know, can everyone hear me? Thumbs up, everything good? Yes. All right, perfect. So I'm just going to share my screen right now. Okay. Let's see. All right, can everyone see my screen right now? Yes. Okay, that's good. So, well, as I said again, thank you, Alex, for the introduction. It's my pleasure being here, giving this presentation to everyone that is starting their own business. It's specifically very important to know your basics, right when at the beginning of your business, and I think it will really help you out on saving on paying taxes if you know what's the best thing for you. So that's one of the things that I want to know, that I want to be clear in the beginning, that it all really depends on what stage of your business you're in. Every situation is different, but I'm going to make sure to explain everything as clear as possible. Okay. So as I said, my name is Kevin Castillo. I work with LACPA Partners Inc. We are a Latino CPA firm located in North Hollywood, but we're soon going to move in to Burbank. We're going to move on in December 11, and we're going to be expanding our services to more people. We have been in service for 15 years, and our services are, of course, accounting, entity formation, tax preparation when it comes to corporate and personal, tax planning, which is very important for everyone to know and to actually have some sort of knowledge on how to do your own tax planning at the beginning of your business. IRS representations, if you have any concerns or any trouble with IRS, client financial education, life insurance, and also business valuations. So this is what we offer. And well, my name is Kevin Castillo. I graduated from Costa LA with a bachelor's in business administration and accounting. I also got a minor in finance and real estate. I'm also certified QuickBooks Pro Advisor, which means that if you have any question about QuickBooks, I can always I can always guide you and help you when it comes to navigating your numbers to QuickBooks Online. I'm also CPA candidate. Hopefully, I'm going to get my license soon. I'm 2 exams down, 2 more to go. So hopefully soon I'm going to be able to get my license. And I've been an accountant for 4 years. But also I'm an accountant by blood. In my family, there's always, there are many accountants in my family, starting with my dad, also my uncles, from the side of my mom's family, we also have accountants too. So, I mean, everything is there, right? So now, before we start with the workshop, I'm going to announce some important points. This is what we're gonna be talking about the most. First of all, what is accounting and why it's needed? Second of all, about tax and entity setup, what's the best thing for you? And the third part of this presentation is Accounting for Entrepreneurs 101. What is it that you need to look more into your numbers and how you can analyze it better, basically. So we can start right now. So what is accounting and why do people need it? Why business owners need it? Well, the basic or the most simple answer to this question is what you're gonna hear everywhere is the language of business, and it really is the language of business. The goal is to come up with your own financial statements. What is called the most common financial statement is called a profit and loss, which is going to be everything about your revenue and your expenses. And then at the end, you're going to have your net income. That's the most basic statement that you're going to need to have and need to be able to be familiar with as a business owner, just because this can be a lifesaver. This can really, if you're able to track everything good, you're going to be able to know if you're at a loss or if you're doing good in your business, because it's all about the numbers, right? Now, the second most important financial statement, I would say, is the balance sheet. And what the balance sheet is it's a statement where you can see kind of like a picture or a snapshot of your business, or of what you have in assets, what you have in liabilities, and also what you have in equity. And then the rest, there are other statements that probably you may not need to know right now, just because they're really not really required by the IRS, but they can be useful when it comes to analyzing your business. So, but that's gonna be into a more advanced stage in your entrepreneurial journey. So now, why do we need why do business owners need accounting? First of all, it's a legal requirement to have records of your transactions. You have to have about 5 to 7 years of keeping everything in one place, everything that has to do with your receipts. You need to be able to record everything, and you need to report everything to the IRS. Second of all, yeah, it's the tax returns, but it's just not tax returns, but also sales tax if you're selling goods, payroll if you're already starting paying other people as employees, and also there are other types of taxes that you need to be familiar with along the way. It's also needed, another example is to qualify for loans. We had a lot of cases where people were trying to apply and they already had their business. They tried to apply for what was called a paycheck protection program, but because they didn't have everything ready, or I guess their payroll set up for years prior, they were not able to qualify for this loan that actually was forgiven to a lot of businesses. So that's one of the reasons why accounting is needed. You need to have everything together. And last, but not least, it's to analyze and understand your business. If you don't know your numbers, you don't know where you're at. So that's basically the bottom line of everything. Now, I just wanted to show you these numbers. I'm not going to explain anything here because it can seem very overwhelming. But this is basically what the two statements that you need to be familiar with. Specifically this one, the first one it's called the income statement. It's also called the profit and loss statement. What this one does is basically track everything that has to do with your revenue, your cost of goods sold, and your expenses. And then after all, you have your net earnings, your net income, or your profit. And that's really what you need to be more concerned about. Now, second point of this presentation, we're going to talk a little bit more about business entities. Now, there are two things that you need to know whenever you're forming your own business. And the two implications are that there's a tax structure and there's a legal structure, and sometimes they're used interchangeably. And you need to know the difference between these two because, for one, the first implication for tax structure is basically how you're going to pay the IRS, how you're going to pay the franchise tax board, how you're going to pay Uncle Sam, basically. And then for a legal structure, it's all about liability protection. So if you have, I don't know, if you have a problem with legally or a lawsuit, you're able to protect yourself or your business in case of anything, right? So for a tax structure, we're going to look at 4 different tax entities. The first one is sole proprietorship. Second one is partnerships. Third one is S corporation, and fourth one is C corporations. I'm not gonna talk about nonprofit corporations or B corporations just because that's usually not an entity that people really use. So I'm going to use these 4 because those are the most common ones. And when it comes to legal structure, we can look at it on different ways. For example, a DBA, fictitious name, that's the first one. LLP, which is limited liability partnership. LLC, which is very famous whenever you are forming your entity, and there's many reasons why it's really famous, an LLC. And then corporation. Now, for part 1, I'm going to talk more about tax structure. And now, the first one that you need to be really aware of, and basically this is where most of the businesses start with, it's sole proprietorship. And what you do with this is basically everything that you earn and then everything that you're spending, you have to report it to the IRS through what is called a Schedule C. And this is reported in your personal tax return. The process that it's really easy to set up. It's not complicated. It's just whenever you go to do your taxes, you only have to I mean, have a track of your revenue and your expenses, and then that's basically what you need to what you need to do for. And then also if you have any you need any business license from the city, or for any particular occupation that you do, you may also need to get other licenses. But that's basically it. That's sole proprietorship. That's what it is. And something that you need to be aware of when it comes to having a sole proprietorship, whenever you're reporting this in your personal tax return, is about self-employment tax. Self-employment tax is not really a tax; is basically your retirement. But whenever you're a business owner, you're paying double. Of I mean, compared to if you were to be an employee, a W-2 employee, you're paying double of this, and I'm going to show you why in the next slide. The second tax structure, it's called a partnership, and basically what this is you're filling out a form called 1065, and this one is also easy to set up. I mean, you need to have an agreement with your partners. It's what is called a pass-through entity, meaning that you're reporting your revenue and your expenses in a different form than your personal one, and then through what is called a K1, it's reported in your personal return. And then right here also you pay self-employment tax depending on the legal entity that you get with your partnership. So now between these two, which one is the most common one? Sole proprietorship, just because it's basically everyone wants to go on their own. And when it comes to partnerships, other people prefer to do LLCs or a corporation besides having a partnership, just because when it comes to partnership, there is protection, but there is not as much of a protection compared to an LLC or a corporation. So with partnerships, they're not really that common anymore, but it's still a tax structure that you're going to see. So now in this slide, I'm going to talk more about self-employment tax, just because it feels like you're paying more tax whenever you have an entity, whenever you have a sole proprietorship, just because of the self-employment tax. And the reason why, it's whenever you see your W-2, if you have worked for a company before, you're going to see here your wages, and also you're going to see the different types of taxes that you're paying. Right? For example, you pay your federal income tax, you pay your Social Security tax, you pay your Medicare tax. You also have to pay any type of state income tax, which California, I mean, they do. I mean, you have to pay taxes to California. You also have to pay a disability California tax, and then depending on your county, you may have to pay too. It really depends. So these are different types of taxes that you pay, and you can see that on your W-2 at the end of the year. But when it comes to self-employment tax, every employee that gets a W-2, they need to report what is called Social Security and Medicare. Now, 7.65% of the salary, for example, in this case, is 50,000. 7.65, these two combined is what is called self-employment tax that you pay as an employee. If you're a sole proprietor and then you're reporting a net income of $50,000, you're going to pay this double. Meaning, it means that you're going to pay just in Social Security and Medicare 15.3% if you report a net income of 50,000. So you can actually, I mean, you need to know about this, just because that's how it feels like, even though this is more retirement, Social Security and Medicare, but it feels like you're paying more taxes at the end of the year if you're reporting this type of income. Now, when it comes to self-employment tax, and whenever you're reporting a lot of income in your Schedule C, and then you basically are vulnerable to many legal implications, it is better for you to get taxed as an S corporation or as a C corporation. Usually the rule of thumb is, if you are netting an income probably like around $40,000 to $50,000 or above, it's better for you to set up your own S corporation, and so you can be taxed like that, just because with this S corporation you avoid self-employment tax on net profit. and also avoids double taxation compared to the C corporation. But now an S corp is usually kind of like the next level or the next stage of a business owner. If you were a sole proprietor, it's better for you to be taxed this way whenever you're having a greater net income or whenever you're making more money. Now, with this S corporation, owners need to pay themselves a compensation. That's really important. You need to pay yourself payroll. And S corporations are only allowed for US citizens and residents. And it's somewhat of a complicated setup. So you may need to hire either an accountant or an agency or a place where they do entity formation for this. So because you need to kind of file different paperwork with different agents, with different institutions. So that's the S corporation. And then a C corporation is basically almost the same, but it's different in the way that the taxation works. Because in a C corporation, you also avoid a self-employment tax. But what you do is that you get double taxed at the corporate level and also the personal level. So if with an S corporation, you don't get this, but with this C corporation, you do have the double taxation. Now, a C corporation is usually more suited for businesses that are already making more money and already are a big entity, a big enterprise. It's when a business is already having a lot of employees. This is a best suited one, just because at some point you're saving more taxes as a C corporation than as an S corporation, and also depending on the tax. Depending on what your situation is. So for a C corporation, it allows non-residents to own a corporation, and also owners need to pay themselves a compensation. It's also a similar complicated setup of an S corporation, but for a C corporation, it's allowable to have more than 100 shareholders. So a shareholder is an owner. So basically, it allows to have more than 100 people to have a stock on the company. So now that we talked about the structure, the tax structure of a business entity, of an entity, now we have to talk about the legal structure of an entity.
Hey, Kevin. Real quick, we did get a request if you're able to share a copy of this, of your presentation slides. Was that fine?
Yeah, sure. That's okay.
Perfect.
Yeah.
Okay.
I can send it to you afterwards. Is that okay?
Yeah, no, not a problem. That way people can pay attention and don't have to write everything down.
Sure,
and one more question as well too. This is from Carla. As an LLC, do the same restrictions apply? Carla, did you want to expand on that a little bit more?
Yes, thank you. Thank you also for sharing the space and education with me. For the tax purposes, I'm an S Corp. Do the same restrictions of being a U.S. citizen or resident apply when filing for taxes as an LLC with an S Corp tax management?
Okay, so you have an LLC and you're taxed as an S Corp, right?
Yes.
Yeah. So yeah, usually for LLCs there is the limit of 100 shareholders. Now, when it comes to tax, what was the other question again? That for taxation?
Yeah, because in LLC you have to pick how you want to be taxed.
Yes.
And we picked to be taxed as an S Corp. I saw that you mentioned that the S Corp you need to be a US citizen or a resident. And my question is, does that apply when you're an LLC?
It really depends. There's some loopholes, but as a general answer, it will say yes. Just because it's an S corporation, you need to file. There's a form called. There's a form that you need to file whenever you're setting up your own LLC that you want to be taxed as an S corp. And there are probably some ways that you can go around it. Probably not as much anymore, but you can. There are some loopholes. You know what I mean? Yeah. Okay. So now, following this, the presentation for legal structure, there are. In the easiest way possible to explain this is there are 4 legal structures that are the most common. The first one is the DBA, the famous DBA or fictitious name, which the only thing that you do here is basically just put a name on your business, and that's what you reported on your personal tax return. It's a really easy way to set it up, and you do it with, I mean, for example, right here, you do have to do it with Los Angeles County. You have to fill out a paperwork and to put a name on the business, and then you only have to have it notarized and send it to the county. But this one really doesn't give you any protection at all, meaning that if they're going to sue you, they're going to actually go for your personal assets, and then there's no really a separation between personal and business. It's everything together. So with a DBA, you don't have any legal protection at all, but it's really easy to set up. It's probably the best one to start with, if you don't want to pay that much when you're forming your entity. The second one is the limited liability partnership. This one is just specifically for partnerships. And this is also somewhat of a complicated setup. It gives you limited protection. And yeah, I mean, as I said, it's only for partnership tax status. The third one, the most famous one, it's an LLC, a limited liability company. With this one, it's basically it's a complex setup. It gives you limited protection, and it gives you a flexibility of tax status, meaning that you can elect the tax status of the LLC, meaning that you can either be taxed as a sole proprietor, as an S corp, or a C corp. And then, yeah, there is a cap of 100 shareholders. There's a limit of 100 owners. And then the fourth one is the legal structure, and it's corporation. It's also a complicated setup. There's limited protection, but this one can allow you to grow and scale your business more if you have more people basically having stock on your company, because you can have more than 100 shareholders. And then this one for corporation, in the legal structure, you can elect to be taxed as a C corp or an S corp. So I know this can be a little bit confusing. That's the reason why I created this chart, because I think this is the most basic way for us to explain the entity formation. So if you can see here, there's a tax structure, and then there is the legal structure. And then when you see this chart, you're going to see here the different ways that your business can be taxed, and the different ways that your business can be set up legally. So for a DBA, you can only be taxed as a sole proprietor. Of course, you can have many different DBAs for your corporation, but if you don't have anything at all, you're going to be taxed as a sole proprietor. For limited liability partnership, you can only be taxed as a partnership. So it's specifically and strictly just for that. And then an LLC, as I said on the previous slide, you can be taxed as a sole proprietor, as an S corp, or as a C corp. And there are many different ways for you to do that. If you're only one owner of the LLC, you're automatically going to be taxed as a proprietor unless you elect to be taxed as an S corp. And then if you have the different owners for the LLC, you're going to be taxed as a C corp unless you elect to be taxed as an S corp. And then for a corporation, it's basically almost the same thing as an LLC, but in the corporation, you can only be taxed as an S corp or C corp. That's it. So as a default, if you're going to set up your own corporation, you're going to be taxed as a C corp unless you elect to be taxed as an S corp. So for S corps, there's always an extra form that you need to fill out whenever you're setting up your own LLC and corporation. And yeah, basically that's what you need to know about this, about the way you can set up your own business. So and I have some questions, but I can answer them at the end. So, but in this one, you can take a picture. I'm going to send you the slides. So just for you to be more familiar with this, so you can ask your accountant, okay, what's the best thing for me? And yeah, this is actually the next question that you need to be aware of. I mean, which one is better for my business? Like, which one is better? And the answer is, it really depends, because it really depends because of two things. The two goals are you want to pay less taxes, and you want to get the most legal protection out of whatever entity you elect. And our advice is for you to look at three things. The first one is your net profit. Net profit, the reason why, it's because of the self-employment tax. If you're reporting a net income of more than 50,000, 60,000, you're going to be spending, you're going to be paying more taxes as a sole proprietor than an S corp. The second bullet point that we need you guys to look at for your business is the size of your business. And when it comes to this, is do you have a lot of employees? Do you have, I don't know, an X amount of customers? Are you bringing in a lot of revenue based on different customers? So you need to really look at that specific aspect of the business. And then the third one, which is probably is the most important one, it's actually the risk of business operations. So for this one, as I said, I mean, if you're a sole proprietor, you don't have any protection at all. So when it comes to your risk management or your risk tolerance, you need to really look at, if you don't want to risk your personal assets, you may be better off with an LLC or a corporation. But it really depends on really these three things, right? So now we have the different mixes here on this chart. For example, you can just be a DBA. You can just put a number, a name on your business, and then you can be tax sole proprietor. You can be an LLC, meaning that if your business is making less than $40,000 or less than $30,000 net income per year, but you still want to protect yourself, you can do this. You can actually have an LLC, and then you can be taxed as a sole proprietor. If you want to have the most benefit when it comes to actually saving in taxes and also having some sort of protection, it's basically an LLC mixed with an S corp. So an LLC being taxed as an S corp, or a corporation taxed as an S corp. And then if you really want to scale your business on a different level, when you have a really big operation already, it's basically the bottom line is that you're going to be better off with a C corp, and I mean, of course, having a corporation, right? So these are the three things that you need to look at for your own business, because every situation is different. And I guess the third part of this presentation is, what do I need to know about accounting? And I will say that probably down the line, it's better for you to have someone to see your numbers and to really track everything for your numbers. But at the beginning, I know that you as a business owner have to do your own marketing, you have to do your own accounting, you have to do your own operations, you have to do your own sales. So for you as the business owner that is starting right now, what you need to do is, first, you need to do your own bookkeeping. You need to track your records. The reason why, it's because, I mean, of course, there's the legal requirement that you need to report it to the IRS at the end of the year. And you can do it with two things. You can either do it with Excel. I mean, a simple profit and loss, just track your revenue and your expenses. That's the simplest way, that's the most simple way to do it. It's not the most efficient way to do it, but that's the first one. That's basically the one that you can say it's for free to track your own accounting. Then there's a second one, a second choice, which in my opinion, I think I would advise better, just because you can run your own reports in a very efficient manner, and you can see your numbers fast in order for you to make decisions. So the second one is having an accounting software. Usually the most famous one is QuickBooks. There's another one called Xero. We're most proficient in QuickBooks Desktop and QuickBooks Online. So if you need any guidance on that, we can help you out with that. And then the other reason why you need to know your own accounting, like your numbers, is about tax planning, which in other words is strategizing on how you can pay less taxes and how you can become eligible for loans, how you can invest and grow your personal finances. Tax planning, it's very different than tax evasion, because tax evasion, it's basically you're avoiding paying taxes in an illegal way. Tax planning is more, how can I make my situation better, or how can I put myself in a position where I am eligible to get this deduction? That's what tax planning is. And it's basically strategizing. The third one is financial analysis. This one probably it's better for you down the line because this one you're going to be actually analyzing financial ratios. That's more of a that's a little bit more complicated, but what you need to know here in financial analysis is, since you're going to be looking at your profit and loss, which is basically is your revenue and your expenses, that's what you need to know, and you need to understand that. So there's a third reason why, and then the fourth reason why what you need to know about accounting is the compliance aspect of it. Because for example, for somebody that is selling goods, you need to be compliant, not just by paying federal taxes and state taxes, but also by paying your sales tax, which is really important. You can get in trouble if you don't pay your sales tax. And also, if you live in any different county, you need to pay what is called a local tax. Here in the city of Los Angeles, you need to report your gross income with the business license, with the Los Angeles business license. And then usually, if you have more than $100,000 of revenue, you may need to pay a little bit based on, of course, based on your situation and based on the code that the city of Los Angeles gives you. But you need to be compliant with everything, because believe me, you don't want to have any trouble with IRS or with the franchise tax board or with any other entity that is actually collecting taxes. So this is basically it. That's the whole presentation. As I said, my name is Kevin Castillo. I'm going to work with the LACP partners. Here's our information, our website, our office email, office phone number, and also we have social media. You can follow us on Facebook, on Instagram, and also on LinkedIn. It's at LACP Partners. So that's actually it for my presentation. I can take some questions if you guys need some.
Thank you so much, Kevin. Yeah, actually right now, for any of you who might have some questions, Kevin is here, and also Kevin's in the office, so he also has a staff there too, including Oscar, who had some input on the chat box. So yeah, if any of you have any questions regarding taxes or what we covered today, please feel free to ask. Gloria, I know you had a question. Did you want to get off mute and ask, or did you want to type it in?
I think they're typing directly message.
I'm sorry, Graciela. Graciela, did you want to? I think I said Gloria. Hugo, I'll get you a copy of the slides. I'll go ahead and send that out. And then Kevin, looks like Graciela says, if I begin a nonprofit, how do I pay myself?
Okay, I don't see that. Where's the question? Where do you see it? I don't think I hear you.
Sorry. Yeah, it's actually in the chat box. So Graciela asked if she has a nonprofit. So she began a nonprofit. She'd like to know, how can she go about paying herself? How do I pay myself?
Payroll. You need to set up your own payroll. You can either set it up with Paychecks, ADP. Yeah, that's the way that you need to pay yourself as the owner, not as the owner, but as part of the nonprofit. But yeah, that can be. If you have any more questions about the nonprofit, I can answer those questions for you in a more direct manner, I think.
Looks like she had some questions too regarding taxes, regarding being double taxed. I don't know if that's something that depends on the situation, Kevin.
Where's the question? I just don't know what to see now.
Yeah, so it's also from Graciela. Again, she has a nonprofit, and she was regarding taxes, if she's going to be subject to double taxes as a nonprofit. Did I get that right, Graciela?
It says here, how do I file taxes? Am I double taxed? It's because you're not the owner of the company. You're an employee of the nonprofit. The nonprofit works that way. I mean, a nonprofit doesn't really have owners. It has managing. It has directors, and the directors have to pay themselves in payroll. So that's why you need to know more about that. I mean, it's basically you're paying, you're an employee of the nonprofit, because you're not there to make, you have the nonprofit to make money, but to invest it again into the nonprofit. So that's the reason why it's a little bit different with nonprofits and also a for-profit business.
Question,
Mhm.
Kevin?
Yes.
Okay, I've listed myself as a director. So I can make an earning as a director from the nonprofit.
That's a question that you can make an earning. Yes, I mean, you need to pay yourself in payroll. Yeah, you have to pay yourself in payroll. That's the way that you're paying yourself, but you're not, because the way it works is whenever you have a corporation, for example, a C Corp, the C Corp pays out all the taxes, but you usually pay through a corporation what is called payroll and also dividends. The dividends are the ones that are double taxed because, you're basically distributing yourself some of the profit that you already paid at the corporate level, but then you're also paying it at the personal level. So that's how a corporation works. For a nonprofit, you're only paying yourself in payroll. So no double tax. Yeah.
Hey, Kevin, a follow-up question on that. So say I have a nonprofit, it's just me. Can I actually just live out of my account? So if I have a nonprofit, I have a bank account for a nonprofit, I need to pay myself, but I never set up payroll, right? I'm just drawing funds out of that account to, I guess, pay for my everyday living expenses. As a tax advisor, how do you look at that? Is that advisable or not advisable?
Pay yourself in payroll, because if the IRS finds out, doesn't really look good, because
Okay.
you're, for a nonprofit, your main purpose of the nonprofit is for you to reinvest the earnings into the nonprofit itself. So that's the reason why for a nonprofit you need to pay yourself in payroll. For that reason, yeah.
All right, here's a question from Hugo. So it says, is it true that a sole proprietorship and an artist, you could be exempt from paying taxes?
Depends. Depends on what type of, what is it that you do as for art, because if it's purely for business, you have to report your income to the IRS and you need to pay taxes on that. If you're selling your paintings, like you need to report that, because you as an artist, you have your own business. So, unless you do some art for, I don't know, for charity, for to have your own nonprofit, you could be exempt from paying taxes at a nonprofit level, but you still need to pay yourself in payroll as a nonprofit. So that's the bottom line of that.
And I see a hand up for Albert. Albert has a question. Go ahead, Albert, if you want to go off mute and ask.
Yeah, kind of similar to Hugo. I think I'm a designer, so I have a seller's permit, and I do have my DBA registered through LegalZoom. So I have my seller's permit because I do sell merch. However, I know that I can't really tax for my design services. But as a business owner with a DBA, how often are we to pay taxes? Is that quarterly? Is that once a year, or how does that work?
If you're not making enough income, some people pay that every year. Some people pay quarterly, some people pay monthly. I will say that it really depends on your income, because if it's not really that much right now, you just have to pay it every year. But you just make sure that you pay it every year. Yeah.
Got it. Thank you.
All right, and then we had another question from Yesenia. She has a seller's permit in California. Am I exempt from taxes?
You have a seller's permit from California. Are you exempt from taxes? No. You need to pay the seller's, the taxes file. You need to pay sales tax, which is what you actually collect from customers, from clients that actually buy your merchandise. And yeah, you also need to report your own income with IRS. and the franchise tax work if you live in California.
All right. And next question comes from Carla. Carla asks, as a member of an LLC, do we need payroll to pay members?
Depends on the structure, but if usually yes. Because for a partnership, you don't really have to, but if you're taxed as an S Corp or a C Corp, you have to.
So thank you for that.
They tell them about the website and the free consultation.
Albert, did you have another question by chance? I saw your hand raised. No?
Oh, sorry, I forgot I got to put it down manually.
No worries. All right. Lydia has a question. Is there a limit as to how much you can pay yourself when you are the director of a nonprofit? Or how does it work? Who decides how much you get paid?
You decide how much you get paid. As a director, you decide how much you want to get paid. Usually, if your nonprofit is not making enough income, of course, it really depends on how much you're making. But I will say, yeah, that's very subjective. I will say you may need to look at your numbers first because you also need to make sure that your nonprofit survives, right? So and also make sure that you're reporting net income whenever you're doing you're reporting your income to the IRS. Just because that net income is not gonna be taxed, and it's you're basically putting the money again into the nonprofit. So I will say there's no really limit, but it really depends on the situation.
Yeah, that's a good question. I would say too, I guess kind of what I hear you saying, Kevin, it relates up to the nonprofit, how many people are in a nonprofit, do you have a board of directors, are you involved with that type of stuff, right?
Yeah.
Let me jump in here real quick. Sorry to cut you off. But about the payments, the IRS uses reasonable, so the whatever you pay yourself has to be reasonable. So basically, what that means is you can't pay yourself $200,000 and then your nonprofit has a loss. So it needs to be reasonable. That's what the IRS looks for.
Got it. Thank you.
Any further clarification, Oscar? Perfect. Any other questions for Kevin? Lydia, I hear you, baby.
Sorry.
All right. Well, hey, I definitely appreciate these are some good questions.
Go
ahead, Kevin.
I just wanted to know if you want to do a consultation with us, you can do that, and you can go to our website, www.lacpainc.com. We do free consultations. If you have any more questions for anything specific to your business, we can give that to you for free. We're here to help the community. We want more business to grow here in Los Angeles. So just whenever you have the time, just set up an appointment with us, and we can go from there.
And Kevin, I just want to clarify, I already know the answer, but since a lot of people here are from Orange County, do you have an Orange County, do you take Orange County clients as well?
Yes.
All right.
we take from all the state, we take from all the country. we even have some clients that are international from Peru. So yeah, we take from everywhere.
Perfect. Awesome. And also you provide your services in Spanish as well?
Yes. Así hablamos español nosotros. Entonces, si tienen alguna pregunta en español, o si solamente si quieren comunicar de esa manera, pues aquí los podemos ayudar de esa manera.
Muy bien.
Spanish, yeah.
All right, perfect. All right, everyone. Well, I'm going to make sure that all of you, so once I get the slide deck, I'll go ahead and send it out to everybody that's on here. Also, this session has been recorded, so I'll go ahead and send out a link to all of you who have attended today. Kevin and Oscar, thank you for joining us today. Thank you for giving us this information. Again, it's a loaded topic that you know, can have a lot of questions. So I appreciate you sharing the information, and I encourage all of you too, if you do have some extra questions or want some more clarification, there's a contact information for Kevin and his firm, and feel free to reach out to them. Also, if you're interested in anything that we are providing here at CIELO or any other events, feel free to reach out to us as well too. All right, thank you so much, everybody. Thank you for joining us today, and that concludes our CIELO workshop series. Everyone have a great Wednesday.
Thank you.
Thank
you,
you.
everyone.
Thank you so much.
Thanks.